Thanks, Chris. Now to our money guru, Scott Phillips from Motley. Scott, good evening to you. And as Chris looked at BHP's profit and dividends, can you take us through what this merger with Woodside will look like and why it's such a significant change of direction?
Yeah, Tomo, good evening. It is a huge deal, a $20 billion deal, as Chris mentioned. This is really a story of BHP choosing to get itself out of liquid fossil fuels. And this is, you mentioned the change in direction. That's the big part of this story. Now, they call it a merger. No one takes anything over these days anymore. They just merge them with something else. This is absolutely a sale of BHP's liquid fossil fuel assets, oil and gas, into Woodside. Basically, what's going to happen is BHP shareholders will end up getting Woodside shares as part of the deal. Their BHP shares will be worth less, but they'll be compensated with some Woodside shares. They can buy, hold, or, of course, sell those shares. Now, when it comes to the change, you mentioned the change in direction, this is very much, I think, a story of what we'll see a lot of going forward. It hasn't been long ago that AGL, the energy retailer and generator, tried to and is still trying to spin off the unenvironmentally friendly part of its business, the coal-fired power stations. To some degree, BHP, which has been pretty vocal on climate change action and knows it's in the crosshairs of many an investor and activist, is actively choosing to basically rid itself of that business and remain in other assets that simply don't have the same environmental stain. Whether that's real or ideological, that's up to you. But the key one here is they simply don't want the baggage anymore.
OK, now we'll have to wait until tomorrow to see how the market reacts here. But we've already seen positive moves for BHP in London, although BHP's dual listing with London is about to come to an end.
That's right. It was the big Australian and the big Anglo-Australian. Of course, it took over BHP Billiton, and was called BHP Billiton for a while. It sold off or spun off most of those assets into South 32, and again, shrinking itself one more time by getting rid of these assets. As Chris mentioned, still it's 23 billion Australian dollars, I should say, in profits. It's not getting smaller by any significant stretch. But yeah, very much now a very focused, largely iron ore and some other assets, metallurgical coal as well, but very much a smaller, slimmer business, a business focused on very specific assets. And as you mentioned at the top, or Chris mentioned at the top, those iron ore prices really a key part of what's delivering all those dividends to very happy shareholders.
OK, let's turn to the action here. And the best performer was real estate's Domain.
It was a really strong result from Domain in what was a choppy year. In the end, there weren't massive impacts on house prices. In fact, we know they continued to climb. A 10% increase in revenue led to a 20% increase in underlying profit for the company, about a 60% rise in its reported profit. But of course, the underlying number, a more solid understanding of what the business is actually doing. But a really, really credible result for the number two in the industry.
OK, on the flip side, the biggest loser today, Magellan, down more than 10%.
And this is a fascinating one. Hamish Douglas from Magellan saying, don't worry, guys. The results were ordinary, but don't worry. We're taking a long-term perspective. I tend to think he's probably right, by the way, and I wouldn't at all be surprised to see if the fall today is a buying opportunity in the fullness of time. They made some investments that have lost some money in the short term, including funding the new investment bank, Barrenjoey Capital. Now, over time, if that business does well, they will make many multiples of their investment. But for now, at least, those are showing red ink on the Magellan balance sheet, and investors heading for the hills in what was already a pretty pricey stock.
Finally, Scott, how is Wall Street looking?
That decline we saw in our markets this afternoon are bleeding into US futures, unfortunately. Our 1% fall leads to their 0.5% fall in the futures before they open for trade tonight. There is a general concern, I think, macroeconomically and frankly geopolitically, as you've been reporting this evening, on what the world might be looking like. And some people thinking more about some of the risks, and that's leading to some red ink on share market screens.
Scott Phillips, thank you.